It's not just about hunting unicorns. I think that's a fairly dangerous sport. We always talk about, a business's survivability and thrivability. Solid cash flow, near-term customers, and is able to get to cash flow break even in a relatively short period of time, and then grow from there. And the thrivability are the ones which, they may not even have a product for another 12 months. They're not in market, they're pre-revenue, but they're really exciting concepts,
Welcome to the Global Investor Podcast. The goal of this podcast is to offer investors and entrepreneurs insights and practical advice to dramatically improve the kinds of deals that you invest in and the returns that you get. My name is James Evenson. I'm one of the partners at Crown Private and our investor syndicate, Vulpes. Vulpes is about exceptional people, unique experiences, and bespoke investment. Our membership and our community are built up of like-minded yet unique and adventurous individuals, as well as family offices. We invest in a spectrum of deals from established companies to startups, and we do so with a proven formula of due diligence, structuring, and management. Our guest today is Hugh Bickerstaff of Singapore-based Vulpes Investment Company. After spending the past several years as a chief investment officer at Australia-based Investable, Hugh has joined Vulpes to build their venture business as an advisor and a key member of the investment committee for their current Vulpes Special Investment Fund. The fund, as Hugh and I are going to be discussing today, is focused on investing in great founders with high potential businesses in a post-COVID-19 world, companies that are raising capital in this difficult period. Hugh has a long career as an entrepreneur and founder in the information technology sector, and later became an active early stage investor. All right, Hugh, great to see you. Where do we find you today?
In Sydney, Australia, on a beautiful, clear winter's morning.
Oh, that is perfect. Yeah, I just saw the view from looking out your window, and I don't want to distract us with looking out the window. So very happy to have you here with us from Sydney. And I'm currently in Portland, Oregon, so it's opposite end. And I'd like to dig in if we could. When I first met you last year in Auckland, I was quite impressed with the processes that you developed when you were with Investable for building deal flow, qualifying possible investments, acting on investments, engaging and managing your portfolio companies, and then working towards exits. So you really have a successful track record. I'd like for our listeners and viewers for you to drill into what that entailed and the process, and that'll shape where we're going in this conversation.
Absolutely. I think, as an early angel investor, I, made a lot of investments, joined a company called Investable. I was actually one of their clients and an active angel investor, and they asked me to come on board. And the first task was really to take what I'd been doing for a number of years and what Trevor Folsom, one of the co-founders of Investable, had been doing for a number of years, and build a scalable and replicable process and model around how we were tackling angel investing. So we often talk about the art and the science of angel investing or early stage investing because there's a lot more qualitative analysis rather than quantitative analysis at an early stage company, because you simply don't have the data to do the quantitative analysis yet, or to test the assumptions. So I looked at 5 key areas of process that you need to be a great early stage investor. And the first one was, sourcing. So the first area was, how do you actually get access to quality and abundant deal flow? The second area was, once you've got access to that deal flow, how do you actually screen it? How do you actually decide which of these opportunities are the ones that I want to dig deeper into and pursue and potentially make an investment? The third area was, how do I actually secure that investment? Just because a founder is raising capital or a company is raising capital doesn't mean they want you on their cap table necessarily. So how do you actually have a brand in the market that founders want you on their cap table? So, that goes to, how do you add value beyond the capital? What do you bring in addition to capital? And, how do you attract the great founders and the great opportunities? Because they're not sitting around on crowdfunding pages necessarily. They are, held quite tightly, often the best opportunities. Then how do you support those founders? So, the next area is you've made the investment, but, this is going to be generally quite a long relationship that you're going to have with this founder, and how do you help them through that journey? How do you help them avoid some of the potholes and come out the other side with a successful exit? And that could be a 7 to 10 year journey if it's a very early stage company. And the last area was, how do you do it at scale? Because we at Investable, for example, saw 2,000 deals a year. 2,000 companies that were raising capital. And, how do you bring it down from 2,000 to the 300 that you want to meet face-to-face, to the 60 that you want to do due diligence on, to the 15 or 20 that you want to invest in? And then so that whole process needs to be able to be done at scale. And that's, that's easier said than done. So those were the 5 key areas. So, sourcing, screening, securing, supporting, and scaling. And
okay, if you miss one, I can remember them as well.
Fantastic. And the other thing is, in that screening area, which is like a really critical area, it's great to have access to deal flow, but then to be able to decide which are the ones that you want to delve deeper into, you need to have some criteria that you're looking at in every deal. So we came up with 16 key areas that we look at in every deal. And they fall into 3 broad categories. The articulation of the opportunity. So, the founder's ability to pitch, their pitch deck, their business model, and the way they articulate the opportunity and the vision they have for the business. Then the actual business elements of the deal. What's the competition? What's the risk and compliance issues? What are the business model? How strong is the team and the advisors that they've put around them? Is this a sunrise or a sunset industry? Is this a business that has some traction already? What's the tech and any other assets that they have, any IP or trademarks or anything in the business? And then we look at their plans and projections. Obviously, we don't give enormous credence to projections. Very rarely does a company ever exactly hit the projections or even often closely hit the projections that they put forward. But what I look at really carefully is the quality of the thinking that's gone into those projections. So, have they just made an assumption that revenue is going to increase 20%, every quarter, or have they drilled down to understand the connections between the amount they're spending on marketing and sales and so on, to the pipeline, to the resourcing they'll need within the business to support those clients and so on. So how well does it all hold together? Have they got certain milestones where they're going to enter a new geography or release a new product set or something like that? And have they adequately resourced and brought in the right level of expenses to support that activity? And is that a realistic time frame, for launching into a new geography or developing and releasing a new product and so on? So we really delve into what's the strategy behind those projections, and what are the assumptions behind those projections? Have they got a cost per acquisition of 80 cents when we know that it's at least $2.50? So we check all of those assumptions and any validation they have around those assumptions.
So
as well.
You must have a team of people behind you that are adept at digging deep into the prospective investments.
Yeah, we definitely have an analyst that understands what we're looking for, and they will give me a commentary around how well they believe the financial projections and modelling has been done and put together. So quite often it's very, very evident that that there's no effort or no expertise in the financial area when you see some of the modelling. But other ones, will come through, and there's a lot of detail and a lot of thinking that's gone into the assumptions and the building up of their projections going forward. So it's always good to know that. I mean, I get some founders who say, we didn't put together the financial model, my accountant did, and I'm the creative one, I'm not really that commercial. Well, hey buddy, I'm about to give you my money, so don't tell me that you're not commercial, because
and you just gave me a good reason not to give you my money.
Yeah, exactly.
So what is the art side? You said that it's a combination of art and business acumen. Those aren't your exact words, but a lot of this to me is intuition. There's intuition tied to it as well. But what is the art side for the process?
Yeah, look, I think, when you're looking at early stage, it's disproportionately about the founder and the team, right? So you're really looking at, why is this founder passionately connected to this business? So, why did they start it? What's their connection to the business? What's their domain knowledge around the area? What's their ability to bring others on the journey with them, whether that's investors or, employees? How effective are they at articulating the vision and getting people excited about bringing them on the journey of this business? Because, that's really important, and resilience is incredibly important, right? Because the startup journey is rarely a smooth one. There's always challenges. There's always times within that business where you think about throwing it all in. And so you need someone who's resilient. You need someone who's passionately connected to the business, who has a vision for where they want to take it and is able to excite people about coming on that journey, who is coachable. One of the things that I really look for is, people who are coachable and will have surrounded themselves with advisors already that are smart, that are, that they're working and engaging actively with. I often ask them, how are you engaging with that advisor? Like, how often do you talk to them? What do you talk about? That kind of thing. Because often people put pictures on a slide, and that's my advisor, and, they talk to them once a year. It's not really what I'm looking for. I'm looking for people that will really effectively use all the resources around them. So yes, disproportionately about the team and the advisors and who they've brought on into the company. But the other areas are, how well do they understand the market that they're entering? If I ask a founder, who's your competition, and they say, well, we don't really have any competition yet, we're the only ones doing this, I kind of, I get online pretty quickly and find either...
It's not hard, is it?
takes me about 3 minutes to find some competitors, and often some indirect competitors that could really impact them if they moved into that sector of the market as well. So
absolutely.
Yeah. So there's a thing about awareness as well, self-awareness and awareness of the market and the competition and the journey you're embarking on.
As you're speaking, Hugh, I'm processing through some of the investments that companies I've invested in that are early stage, as well as ones that I've chosen not to, and why I chose not to. And it usually is about the founders, just like you said. Also, what you've just shared really is sage advice to people who are making their own choices for what they invest in terms of how the processes that they go through. Because a lot of people at early stage, a lot of investors get excited about the idea, but
Yes.
You've got to look behind the curtain and behind the screen and see. And evaluate, is this company, what are this company's chances of being successful? Because we want unicorns, we want success stories. How is this, I won't call it a formula because it's much more than a formula. Mm-hmm. When we met face to face and worked through your presentation of it, it's multiple pages, multiple slides with a lot of details to understand. It's more like it's a course, but it's really much more about 20 plus years of life experience for you and your team. So anyway, where I'm getting to now is how has that worked for you?
Yeah, look, I really enjoy what I do. Very passionate about what I do, and we've had some really great success. I mean, the portfolio that I managed at Investable was a portfolio of 80 investments. Those investments were made from 2010 to earlier this year, and that portfolio was running at an IRR from 2010 of 61.2% return annually. So great IRR. We had returned 3.8 times cash invested on everything that was invested to pre-2015. So people had kind of 4 times their money back already, and they had another 9 to 10 times in unrealized gains still sitting there. So those investments had gone really well. And I think, the key to early stage investing is building a portfolio. And when we build a portfolio, it's not just about hunting unicorns. I think that's a fairly dangerous sport. We always talk about, a business's survivability and thrivability. So the survivability is about, solid cash flow. Is this a business that, has near-term customers and is able to get to cash flow break even in a relatively short period of time and then grow from there. And the thrivability are the ones which, they may not even have a product for another 12 months. They're not in market, they're pre-revenue, but they're really exciting concepts. They're looking at disrupting an area of the market that's massive and global and so on. So if you only pick those ones, you will potentially get a lot of failures, So we try and balance the portfolio with, we call them cockroaches and unicorns. So the cockroaches are hard to kill. They'll give you a 5-10 times return every day of the week. They'll get acquired. They're a reasonably, predictable and solid business compared to the over the radar shots that are your unicorns. So I often had people say to me, your IRR of 61.2% is only because you invested in the seed round of Canva and Ipsy. Then they were 2 early investments, and they have driven incredible returns. I mean, Canva in their seed round, we invested at a 5 5.6 mil US valuation, and that's just done around last week. They raised 60 million US at 5.6 billion. So, you know, from 5.6 million to 5.6 billion is, you know, is what you're looking for. But if you only make 10 investments, your likelihood of getting one of those is very low.
Correct.
So, you know, that's where I go back to the scale and building a portfolio of early stage investments. If you're doing sort of seed to Series A, I think you need at least 30 investments.
Mm-hmm.
You know, because you are looking for that one that gives you the super returns, and it makes up for the 4 or 5 that might, you know, will fail. So you need to really consciously balance that portfolio.
Okay. So you're saying 30 investments to...
yeah, I think if you're doing seed, certainly seed to Series A. If you're doing Series A, you know, and beyond, you can start to, you know, reduce that number a little bit, because you're going to have more quantitative evidence of their assumptions and more validation around some of the risks and so on. So you can start to manage that risk a little bit more effectively.
Well, let's fast forward to now, because Investable for you is in the past, and you are now with Vulpes. And tell us a bit about Vulpes and what brought you to it and what you're engaged with now, because I'm actually leading into where we're going and talking about a very interesting fund that you guys are doing right now.
Yeah, absolutely. Well, I'm really, really happy to be with Vulpes now. I met Vulpes through my work at Investable. We were looking at a joint venture in the Southeast Asian region, an area that I'm also very excited about, and we'll talk about later on. But the opportunity in Southeast Asia, I think, is really, really exciting. Vulpes have been operating in that region for nearly 20 years in Singapore. They originally started out as a hedge fund, Travis, and they went into the GFC, I understand, with around $2 billion US under management. Was short on credit and long on volatility, and turned out to be really correct in that strategy, and came out of the GFC with around $5 billion US under management. So following that, they realised that was a kind of a one-off event. One of the founders, I think, retired on that return. The other one decided he still enjoyed, working and what he was doing. So he bought out the company and continued it as his family office type structure, and that was the beginning of Vulpes Investment Management. And they've invested in a number of things. They've invested in agriculture. They're the largest avocado producer in New Zealand. They've invested in life sciences and also in venture. And they've had some great success in venture. They invested in a company called Property Guru in Southeast Asia in their seed round, and that has gone on to be a unicorn. And another company called Trax, which has also gone on to be a unicorn. They launched, as you know, a fund in Myanmar, Seed Myanmar, and they have a real passion for, early stage investing. But, what they didn't have was a lot of process around early stage investing. They'd made some good investments, which were, which were really successful for them, but they hadn't built that scale into that process and the detailed processes. So what I'm excited about doing is bringing some of that process to Vulpes and helping them establish a really strong team doing the types of analysis and due diligence that I was talking about earlier. That's kind of what I'm looking at. And, having been established in Singapore for something like 19 years and having the all the licenses and governance of handling people's money over those years and working with MAS in Singapore, that's a great platform to build on. They're very well respected in the region, but also being able to prove themselves to be quite opportunistic in difficult times and crisis and come out of it, with a really strong return for their investors. And looking at the period that we're in right now globally, it's another one of those opportunities where a good solid strategy in deploying capital during this period could be really, really fruitful. So
right. With Vulpes, my history with them goes back a few years, and I actually was first introduced to them in Myanmar. We have invested in a couple of their funds, and Obras and our predecessor, Seraph, have been active in Southeast Asia for several years, and in Myanmar, we early in our investment in the seed Myanmar fund, we were introduced to some of the companies. They only had 2 companies at that point in time that had been invested in. There were 2 on the horizon. And then Rita Nguyen, I probably mispronouncing her name, was on independent from Vulpes, but really on the ground in Myanmar. And in meeting with Rita, I was quite impressed with how the folks at Vulpes surround themselves with people who have complementary skill sets and expertise. Just like, I'm just adding on what you said, is that they knew their strengths. So bringing you in to help them shape how they approach early stage, bringing in, I don't want to say it's formulaic by any means, but it really is helping them add that layer onto their own approach to how they invest. And so we get to where we are now, where you're part of the team. You are providing significant guidance on the early stage investing as well as the processes for investing. Let's talk a bit about Southeast Asia. What inspires you about Southeast Asia as an investor? What are the where do you see the real opportunities and the types of investments? What do you appreciate?
Yeah. So, I mean, for me, I think Southeast Asia is one of those, right time, right place opportunities. I think, the demographics in the region where, over half the population is under 30 years old. They're quite tech savvy. They have access to mobile, cellular infrastructure and internet infrastructure that's really strong. They basically live on their smartphones. They shop, they bank, they're doing everything, and they're kind of leapfrogging a lot of the technologies that we've had for some time, and going straight to mobile technologies. And they love their technology. They're great entrepreneurs. There is enormous scale available. There's a lot of growth available in those regions. There's still a cost base for startups and businesses that's quite competitive globally to build their businesses. And, it's a resilient region as well under crisis. So, through the GFC, through the dot-com crash, through SARS, that the Southeast Asian region has bounced back faster and stronger than any other region globally. And it was still producing growth during those periods. And I think, the ability to access, strong founders, and the ability to scale businesses quickly in Southeast Asia is really exciting.
On a more superficial level, I completely agree with you. I find that when I'm spending time in the Southeast Asian countries, particularly Vietnam, Myanmar, I mean, even the established Singapore, and meet the founders of companies, and just even those who are entrepreneurs, there is an inspiration, there's a resilience that you've described, and it is a fascinating region to see it develop, and it really is developing quickly.
Absolutely.
Yeah. Well, let's jump into the crux of what brought us here today. When I first met you, I thought it would be great to do a podcast, but I waited a while. And the reason I wanted to do a podcast with you was your approach to investing, because it certainly has led me to think through my own approach. How do I make decisions, and how do I engage the companies that I invest in? And how can we as Obris, there's a lot for us to learn as well from that, as we're choosing, going through the processes of building our portfolio and the portfolio for our investors. So the crux is the Vulpes Special Opportunities Fund. Let's dig into that. Let's start with the Vulpes' track record in South. Well, actually, why don't you just give a few words on what the Special Opportunities Fund is?
Sure. I think it's a bit different from most of the other funds that I've been involved with, because I've done a lot of seed to Series A funds. Mm-hmm. This one has a little bit broader mandate than that. It's a shorter term fund, so we're looking at being able to deploy quite quickly. This is a point in time opportunity in the market where we're seeing valuations coming down quite rapidly, and I'll talk more to that later on. But it's important to begin deploying capital while other people are waiting and deciding what's going to happen, because there are significant opportunities to be had right now. So mm-hmm. we needed to put this together quite quickly. So it's not a large fund; it's quite a small fund with a short deployment period. And we're looking at businesses that have traction already in the market, that we're looking to co-invest with some of the other successful VCs in the region, because our ability to meet face-to-face with founders and travel and see their businesses is constrained by mm-hmm. COVID-19. Our ability to actually fly in and meet with founders and meet the whole team and so on is restricted. So, mm-hmm. We have to be careful that, we're investing in businesses that are known to other VCs in the region who are successful and who are our partners. So, that's an element that is probably more important now than typically. Mm-hmm. We're looking at people who are raising seed to sort of Series B, but they've, have a need to raise capital during this COVID-19 period. It's difficult to access capital at the moment. And therefore, they're prepared to do small bridge rounds at highly competitive valuations. So mm-hmm. We're looking at that. We're also being very careful about, what is this business's relevance in a post-COVID world? Is this business going to recover, bounce back, bounce ahead, and gain momentum from this situation? How is it going to be impacted? If it's got a great founder and a good business model, obviously their revenue is going to be down during this period, but how quickly can it return? And in fact, have they made adjustments to their business that will make them even more relevant going forward? So, it's exciting period. It's a sector agnostic fund. Mm-hmm. We don't invest in things we don't understand. So we're not going to do areas of deep research or so on that we don't understand. But it's sector agnostic, predominantly Southeast Asia.
Mm-hmm.
The other thing that's quite different for me is Vulpes as a business is not focused on fee generation. This fund has only got a 0.5% management fee associated to it, as opposed to the normal sort of 2%.
Correct.
Or plus. So they're focused on making exciting, and fantastic investments. They're not, an organisation that's focused on short-term kind of fee generation, which I think is quite interesting. And we'll be investing in 10 to 20 companies over a 12 to 18 month period, probably 250,000 US to 500,000 US check size. And then, once we get further into that investment period, we're going to make a decision about whether to potentially roll this into a larger fund later on, or just roll it off as these investments have a liquidity event. And we're looking.
How far out do you think that would be?
Yeah, so we're looking at obviously as soon as possible in terms of a shorter time frame is good. We're not looking at investing in things that we're going to be having to wait 10 years to get a return. So the other thing about the Southeast Asian region is that it's a very desirable region for acquisitions for, US and European companies expanding globally. They're looking for companies that have a footprint in Southeast Asia, and, Southeast Asia is not a country. It's hard work establishing a business throughout Southeast Asia. You're dealing with, multiple cultures, multiple governments, multiple countries. It's a complex region, so it's attractive in terms of acquisitions. So I would see that the predominant exit opportunity will be acquisition or a secondary sale. The frequency of secondary sales now is quite high. So there may be an ability to sell out our position to a later stage investor in those businesses.
Absolutely. So you've described a very short window for getting established. Describe the types of businesses that you're going after. What kind of investments are we looking at? How many?
Yeah, so looking at sort of 10 to 20 investments. The ones that are well progressed in the pipeline at the moment, to give you just some real life examples, we're looking at an insurance tech business that has built algorithms and rating and pricing models around how you drive and pay per kilometre type models. So they're using the telematics that are built into vehicles these days, and collecting data on how people drive and adjusting premiums based on, whether you're using your phone while you're driving, whether you're going over the speed limit, whether you're braking too quickly, whether you're cornering well. So they're actually, collecting and analysing that data and modifying your premium and rewarding drivers for driving well, and also, a pay per kilometre model. So that motor vehicle insurance industry is dominated by very consolidated, by very few companies who just take a massive portfolio approach to pricing and so on. So they don't really optimize pricing per customer very much. So we think there's a big opportunity to disrupt some of those massive incumbents, and more so also to use that technology as a platform to sell to other insurers. So the model is not just to be a B2C, but also more so a B2B type model, in enabling other insurers to use that technology platform, those algorithms.
What are the bones of this company, or what is the anatomy of this company that makes it stand out to you?
Look, I think, there is a good founding team. They have a lot of domain knowledge and experience in this sector, and they have a lot of, they're very well connected in terms of that industry and their ability to be able to execute on that plan. I think that the trend towards telematics by the vehicle manufacturers is another factor there. So they already have relationships with a number of the manufacturers who are building telematics into their vehicles, and will be able to offer insurance to the to the buyers of the vehicles at the point of sale. And make an additional line of revenue, if you like, off the insurance. So I think that there's a number of things that we like about that one. The other ones that we're looking at the moment, we have a social influencer platform, which is very well established throughout Southeast Asia, and you're already quite established and growing very nicely. And they have a strategy to add 2 or 3 more exciting geographies to their business. Good founding team, good venture capital partners already in the business, who are all following on in this round. And it was just a case of, they needed to raise capital during this period. So they just, run into a timing issue where they needed to raise capital. So we're happy to work with the existing investors to help them get through this period, because it's an exciting business.
Do you find common themes in terms of how businesses are affected by COVID-19? Because that's clearly the impetus for creating this fund, is that we're in a crisis moment in time where values have dropped, and there's really a lack of security overall in business infrastructure. And I imagine it affects the early stage companies perhaps even more than some of the more established.
Yes and no. I mean, a couple of the companies we've been looking at, are very early stage, so they don't have a big burn. They don't have a big team. Sure. So a downturn in revenue for them has not actually had a big impact to their runway, and in fact, it's enabled them to spend more time developing their product and validating their product. So I think it's too early to say that there's a really consistent trends in terms of valuations because of that uncertainty at the moment. We are definitely seeing discounts in valuations, but it really is kind of on a deal by deal basis at the moment, depending on the circumstances of that that business and who's already invested in that business and their ability and willingness to support the business through these times and so on. So I think it's too early to say it's consistent in terms of trends, but we are definitely seeing, I guess, a trend towards some short, bridging rounds. Obviously, if you're going to take capital at a valuation that's suboptimal, you don't want to raise a lot of capital. You want to raise what you need to get through that period and have a runway that will get you back to a period where you can potentially raise capital with more confidence at a higher valuation. So what we are seeing is that people are willing to negotiate quite aggressive terms on a bridging round. That kind of suits us because we're investing check size of 250 to 500K. That's not a huge check size, but we're able to deploy what's a fairly small check size at really great terms. So that trend is definitely working in our favour.
Yeah. Well, I think that as an investor, as an entity, your team brings significant value to those companies as well. I mean, you wouldn't necessarily have met a lot of them if not for the current crisis. But the fact that you're investing in them and you're able to actually help them out, not just in terms of bridge financing, you're bringing your expertise to them and years of experience. Mm-hmm. Well, for our Oberus investors, we will be providing the presentation on the Special Opportunities Fund for them to review in detail. So we don't have to go into. We'll let them dig into the true details of the fund. I'm certainly intrigued by it. I like where you guys have gone. That I was just thinking about in bridge financing. Oftentimes, someone is really needs a quick loan, and really what you're offering is so much more than that. Is that you're not taking advantage of a situation of a company. You're actually looking at where you can go with that company, and with these younger companies that have their own certain vulnerabilities and affectations from the current crisis. I see it as really a win-win for all parties involved, and that's part of why we're presenting it to our investors as something to consider investing in. So, absolutely. Any additional words, and then because we'll wrap up here fairly soon.
Yeah, I guess look, only that you're quite right. We're investing in companies that we want to have an ongoing relationship with and help them to crystallize value later on. Mm-hmm. But we're also, getting preemptive rights in these companies as well. So we will have the ability to follow on
sure.
and put more into the ones that do bounce out and succeed greatly as well. So there'll be an ability to access putting more capital in as they grow.
Right. Well, I like that it's. You have a short time frame for the fund, but a lot of possibilities after 12 to 18 months of what it will look like in the post-COVID world. Someone might be listening to this 6 months from now, and it's a very, very different scenario to what we've experienced now. All right, any last words before we wrap up here, Hugh?
No, I think that's it, James. Thank you.
Right. Super. Hey, I really appreciate you joining me today.
Fantastic. Cheers.
And I know our listeners will as well. So thanks very much, Hugh. I really appreciate Hugh's insights on choosing investments well and what he's distilled down to art and science. This forms a foundation for the Vulpes Special Investment Fund. It also is the basis for why we partner with Vulpes in Southeast Asia in the early stage sector. The presentation for the fund has been shared with Oberus investors. If you're not involved with Oberus and you're an accredited investor and are interested, please contact us through the website. Our website is obrusinvest.com. That is OBRISINVEST.com. While you're there, dig into the site and see if Oberus may be a good fit for you. As I said in the intro, we're about exceptional people, unique experiences, and bespoke investment. This podcast gives you a glimpse into our bespoke investment. As far as unique experiences and exceptional people, really our events are the best way to get to know us. Check out the website for details about our next event. Our next event is to be in Beverly Hills, California, and that will be when restrictions for travel ease, and that we're hoping for sometime in fall 2020. And then about our members and our guests are really an amazing group of people, self-made, accomplished investors. We come from 18 countries and a wide variety of professions. We share the common pursuits of surrounding ourselves with great people in great places and gaining significant returns in investing. Thank you very much for joining us this week.